Ladies and gentlemen, good day and welcome to the Mallcom India Limited Q2 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you, Ms. Purvangi Jain.
Good morning, everyone. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations for Mallcom India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter and first half of the financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is probably to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Rohit Mal, General Manager, and Mr. Shyam Sundar Agarwal, Chief Financial Officer. Without any further delay, I request Mr. Rohit Mal to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Purvangi. It is a pleasure to welcome you all to our earnings conference call for the second quarter and the first half of financial year 2024. Firstly, let me thank all the participants joining us today, and I hope everyone is keeping safe and well. Also wishing you all a very happy Diwali. I'm delighted to announce the Sanand project for Protect Safety Gear, focusing on the production of synthetic safety gloves, was initiated in the first quarter of the financial year 2024. It has progressed according to the outlined plan, barring some unforeseen rainfall in Gujarat region, and the company anticipates the completion of civil work by the end of the current financial year. Commercial production is planned to commence at the start of the second quarter of financial year 2025. In addition to the projected milestones, the company unveiled a new catalog featuring an expanded range of high-performance gloves and introduced new styles of safety shoes. Throughout the quarter, the company actively participated in various international and domestic trade fairs, including the largest fair for OSH, which is in A+A Dusseldorf in Germany, and NSC Safety Expo in US. The response from the customers at these events were encouraging. However, there are two major factors which shall explain the degrowth in the export market, particularly with nitrile gloves and workwear. Firstly, as you all know, the European market has dampened. This is because of the ongoing war, economic troubles like inflation, higher interest rate, energy crisis, etc. And this being coupled with China dumping their products like nitrile gloves to the market at very cheap rates to maintain the market share has caused the degrowth in this category for this geography. To counter this, we are putting more emphasis on R&D for these kind of gloves and also introducing newer product categories like the thermal gloves, a major chunk of which will happen in Sanand. So we are hopeful that we will be able to overcome this crisis. We are also expanding it to newer markets like Australia, America, and even in India for these kind of gloves. The second issue is fabric supply chain issue, which we have faced with one of our leading mills in India. They have retracted from production of some of the fabrics that we were doing, and therefore we had a loss in supply chain due to supply chain issues. Again, to counter this, we are developing alternate supply chains from different leading mills in India. However, since these fabrics are technical and take time to certify, and because these are for the export market, it'll take a little effort before we start doing it. We have already started stocking fabrics and finished goods on this regard. Notably, the company achieved a significant milestone by becoming one of the pioneers in the industry to obtain ISO 14001 certification, highlighting its commitment to environmental management. Now, I will request Mr. Shyam Agarwal, our CFO, to give a briefing about the quarterly and half-yearly financials.
Thank you, Rohit, and good morning to all participants. Happy Deepavali. I would like to provide an overview of our financial performance for the second quarter and first half of the financial year 2024. In the second quarter, the company achieved operating revenue of 108 crores, registering a year-on-year decline of 2%. EBITDA for the quarter was flat year-on-year at rupees 15 crore, resulting in EBITDA margin of 14.22%. The quarterly net profit amounted to rupees 9 crore, translating to PAT margin of 8.49%. Over the half-year period, the company operating revenue grew by around 2% to 203 crores. EBITDA grew by 8% year-on-year, reaching to around 30 crores. EBITDA margin expanded to 14.60%. The rise in EBITDA for H124 was primarily attributed at cost-saving raw materials by 35 basis points and manufacturing, along with other operational costs by 38 basis points. The net profit for the half-year grew by 8% year-on-year to 18 crore, with PAT margin reported at 8.73%. Thank you. With this, we can now open the floor to the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Disha Seth from Anvil. Please go ahead.
Sir, good morning and happy Diwali to the management there. Hello.
Disha, sorry to interrupt you, but could you speak a little louder? Your voice is very low.
1 minute. Hello.
Yeah, you're
am I audible?
little better right now.
Yeah.
Go ahead.
Yeah. So happy Diwali. So we wanted to ask you that in last so many years, our gross block has been 80 crores, and in coming 2 years, we plan to invest another 120 crores. So we are almost more than doubling our gross block. So what change has come and what confidence has come in last 18 months that we are doubling our gross block?
Yeah, so Disha, see, basically, over the last 4 years, we have been investing, and almost 100 CR we have invested. And for the current financial year, 20 CR more we want to invest. In the current FY first half, we have invested around 10 CR. So for the future, it would be now at the slower rate. For this year, the total capex should be in the range of 30-35 CR. 10 CR we have already done, and 20 to 25 CR is planned. Yes, we see basically we are 40-year-old company, and the entire block is like we wanted replacement of this and to create a platform where we can target our, we have stated turnover target of by FY28 we would like to have 1,000 crore turnover, and to achieve that we needed a platform. And as you know, we are expanding into our product category like garmenting and synthetic gloves and shoes also. So the platform is now almost being created, and let us, we target to have additional volume and turnover out of this new platform also.
Okay, great to know, sir. And so in terms of, going forward after FY24, capex would be only the maintenance capex, if I'm getting right.
See, basically, we have some, future investment plans depending upon the market situation. So we can have expansion in our Ghatampur unit also. We can expansion at our Sanand project also. But as of now, the planned investment is in the range of 30-35 CR max.
Okay. And sir, in terms of guidance of 1,000 crore by FY28, sir, what kind of gross margins and EBITDA margins, because we'll get more operating leverage. So what are we looking at the current level would be sustainable or will improve as we achieve that 1,000 crore?
So current level should be sustainable in the range of 14 to 15% should be the EBITDA margin minimum which we are targeting, and definitely due to operational efficiency we will target better margin. But as of now we maintain the level of EBITDA margin which we are having now in the range of 14 to 15%.
Okay. And sir, over the last 10 years, our gross margins have been improving. Like it was 30% and now it is 40% plus. So, is this the gross margin sustainable and any scope of further improvement in gross margins from 40% level?
Yeah, so this is what we are targeting. So what we have done as a PP manufacturer, we have been moving towards more of value-added products, which others are there would be lesser competition and you can have better margins. So that is our strategy, and you will see that for the past few years we have improved margin, and that we would like to maintain with the projected or current product mix which we are doing now.
So the 40% will improve because we are going more into more expanded capacity of value added, or it will sustain at current levels?
It should sustain at least, yeah.
At least sustain, okay. And sir, last couple of questions. Sir, in terms of key competitors, how are we placed? It is more from India, China. If you can help us to understand.
Rohit, you can answer this.
Yeah. Hi, Tisha. So yes, so China I think still is a major competition in the global market, and then there are competitors in India, Pakistan, Sri Lanka, Vietnam, these kind of places where manufacturing costs are still low and you have access to raw materials. So yeah, Southeast Asia, I would say mostly.
Okay, and sir, in terms of India, how much market share we have and how much we had 3 years back? So just wanted to see an improvement in market share.
Yeah, in India it is very difficult to estimate because there has been no market study as such. So it won't be right to comment on the market share data. We are not aware of this data.
Okay, and so like how many competitors, are there any ballpark figure or anything?
You mean in India or globally?
Yeah, in India.
In India, see, there will be for different categories because there are 4-5 different categories. So for each category there will be at least 8 to 10 organized players, and then there will be a similar number of probably unorganized players as well per category. And by this I mean by for head, for hand, for body, for feet, and for fall protection. So yeah, you can estimate the numbers.
And so any ballpark figure on how much is the size of global market and what rate it is growing at?
So again, this is a study from the study. So the estimate was almost $60 billion and probably growing at anywhere between 1 to 2%.
And in terms of India market?
Should be around 12 to 15,000 crores. And this is both organized and unorganized, and would be growing at a higher rate. Yeah, I think probably 8-10%.
Okay, sir. So much in capex spent by many private sector. So any thoughts on like it is growing faster than in the past or anything which is helping the growth of the industry and the company?
Definitely the growth.
Top line figure.
Yeah, definitely the growth for us has been accelerated in the last 4-5 years, especially in the domestic market. So that's why Mr. Shyam also mentioned that's why we are investing in capex. So the growth has been there, and we are hoping for a sustained growth like this in the coming years.
Okay. And sir, just one question last. So, how much is the replacement cycle of each of our products like shoes, head protection, garments?
It's different for each. Shoes, anytime between 6 to 12 months. Helmet, the first time it gets hit by an impact, or 5 years, whichever comes earlier. Different kinds of gloves have different. So, some gloves they use for a day or 2 days max, and some will last for 3 months as well. Mask, again, 8 hours shift.
Okay.
So it's different for different category.
Okay. And sir, and in terms of margins, which category has the highest margins? Shoes, head protection, garments.
It depends on the market and the category. So it's not per category basis, except for maybe even for leather gloves, it's not like that. So it depends on the market, export or domestic, and it depends on the product category.
Okay. And sir, in terms of leather, what we use is real leather or synthetic leather?
No, there is nothing called synthetic leather. Leather means it is hide.
Okay. Okay.
Yeah.
And that would be how much proportion of our raw material?
I think
It would be around 10%.
10%. Okay. Yeah.
Okay. And other raw materials would constitute how much? Textile would be major.
We have textiles, we have polymers, we have PU. PU is a big material for us, and then we have NBR.
Proportion, if you can give. Like leather is 10% of raw material basket.
No, leather, just to clarify, leather 10% related to leather gloves only, and we manufacture shoes also. They are also around 20% of my total raw material leather is also required for shoes.
Yeah, I think it will be a fair estimate to say that they're almost equally divided, 25, anywhere between 20 to 30%.
Yeah.
For fabric, for PU, for leather, and for NBR.
Okay, great. So all the best. Thank you. That's it from my side.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Arshil Zaveri from Crown Capital. Please go ahead.
Hello. Good afternoon, sir, and thank you so much for taking my question. Congratulations on a good set of results. So just some questions have already been answered. So just wanted to ask one question regarding our supply chain. We said we are facing some issues. So what could we quantify how much revenue we lost because of that? Or would that impact come more in Q3?
Yeah, it'll be a culmination, Q2 and Q3 as well, is what we are seeing. So almost our monthly turnover for workwear especially, I think, is almost halved, if I'm not wrong. So yeah, it started from impacting from, let's say, July, June, July, and it's still ongoing, and we hope to get back in track from January or February. So yeah, that's how much it's impacted.
I'm sorry, sir. Our monthly turnover, what has halved? I could not.
Workwear, garments, workwear.
Okay.
Yeah.
So that used to be around, garment contribution normally in the total turnover remains around 30-31%. So it is now for this, current half it is 26%. So almost 5% of turnover from garment only we lost because of this supply chain.
Correct, sir. So that we hope by Jan should be on track, sir. Correct. Yeah. So just also wanted to know, sir, as like our target for 1,000 crores, sir. Just wanted to know that how would the ramp up in revenue be? Would it be more rare-ended or it would be continuous, increase in revenue, ladder type increase, or how would it, be like a straight continuous increase, or maybe the capacity comes in and maybe after a year or two there'll be higher, growth jump. Just wanted to get a sense.
So it should be, we target 15% CAGR, so it should be sort of like continuous growth. So still, for the current period also we are managing, we have sufficient capacities, and with the additional capacities, it should, once it is ready, we will try to push, then it becomes more of marketing thing, and year on year the market also needs to grow. So with the capacities, we target that minimum 15-16% CAGR should be there.
And we would be able to do that much in FY24 as well, right? Because of our fabric thing, it is a bit muted in a sense, or
yeah. So we stick with our earlier target, but within that, during the as we mentioned, there were some supply chain issues, and the market is also like Europe not performing as we wanted. So still for the full year, the target remains the same.
Okay, perfect, sir. I just wanted to know, sir, like in terms like we've been able to increase our gross profits, and our margins have also steadily increased. So a lot of this would be a function of our value add, or would it be that we are able to get higher realization for the same products, like, or else our product mix is changing. That is why we've been able to push margins, and that trajectory will continue, sir.
So I tell you how the product mix almost remains same. So it is more of market shifting from, as of now, from local market under our own brand, from export market. So there the growth is more. But, margins are more or less stable in all product categories which we are trying to do. And in future also we see that the mix should remain almost similar. Definitely the growth should be higher in domestic market. So, that's why I stated earlier that, the margins should be steady, and let us see with the expansion how can we can improve on that.
Oh, okay. So if I could summarize, maybe our EBITDA margin would be the same, but because we are getting higher EBITDA, so our PAT would maybe be at a higher percentage than what it is currently. So this, I think is from my understanding.
Yes.
Yeah. Perfect. And just one final question, sir. Any kind of risk that we see per se, because I currently could not see any kind of risk that could hamper our growth. But if being in the industry, could you just call to attention if you feel that some parts that could negatively impact us?
See, we are already in that risk period, right? So supply chain issue risk is something that everybody faces, and we are not special to that. So we are currently facing that. There's the market risk, again something that we're facing currently because of the Europe market being a little damped. So yeah, these are the kind of risks that we are facing, and other than that, there could be risks like preferential treatment to other countries. For example, recently there is a benefits given to underdeveloped economies, such as Bangladesh, Pakistan, etc., for exporting to Europe, which India probably was also benefiting from till some time ago, but now not anymore. So these are the kind of risks which change the market scenario a little bit, and market risks which happen. Other than that, yeah, internally we are all geared up, but yeah, there are external factors which might impact the growth of the company.
Capex which we are doing is also, capex delays can be one of the, concern, but we are, as we mentioned, Rohit mentioned that we are on alert and trying hard to, complete the project on time. And yes, this project should also be contributing to, additional turnover as the things are being planned that way. The market is also being, it is developing like that only. It's for our requirement.
Yeah, I understand the macro issue, but the capex, I think, because we've made up new capacities, we would have that demand, right? So, like, I don't know personally.
Yes. Just talking of risk, there can be, but definitely not. We don't expect that in our case.
Perfect, sir. Thank you so much, sir. All the best. Looking forward to a great next quarter. Thank you.
Thank you.
Thank you. The next question is from the line of Aditya from Securities Investment Management Company. Please go ahead, sir.
Yeah, hi, sir. Thanks for the opportunity. Sir, I'm new to your company, so pardon me if my questions are a little basic. So, firstly, I wanted to understand how do the sales happen for us in domestic and export markets? So, who are our customers, and do we sell directly, or there are dealers and distributor network which we have?
So there are two ways. So we sell under our brand name. This happens in specific geographies like India, Indian subcontinent, Southeast Asia, Middle East, and parts of Africa. And then we are also a private label or a white label supplier to brands and importers in Europe, North America, South America, Australia, New Zealand, and other parts of the world. So in our branded sales market, we sell via our dealer and distributor network exclusively, and we have close to 80 dealers across these geographies that I mentioned to you. And for our white label, we are usually exporting to brand owners or large importers in respective countries.
Got it. So, firstly, if I wanted to understand your private labeling business, so how many brands do we cater to? And if you could just name 3 to 4 large players who would be contributing majorly to our revenues?
So there will be at any point anywhere between 100 to 150 customers in this domain, and we supply to large brands like Honeywell, Bunzl, PIP, etc.
Okay. And if I have to understand the global context, so how many brand players would be there globally, and how many would we be catering to currently?
I don't have a count of how many brands will be there. There will be a lot of brands. Each country will have, some, depending on the size of the country, maybe hundreds of brands as well. So that number I won't have. And how much, if you mean how much market share I have of the global, again, probably a minuscule percentage right now, because like I said, China still has probably 70% of the market. India is still a very small player in the entire global market.
No, what I wanted to understand is, so I know there will be many brands globally catering to this market, but I would believe that the larger brands would cater to majority of the market. So is that a correct understanding, or there are many smaller brands and the market is very fragmented?
No, there are many smaller brands as well. So let me give you, so I mentioned, right, it's almost a $60 billion industry. So the biggest brand, which is probably Bunzl or one of them, their PPE contribution would be 2.5 billion, and they're the biggest in the world, and they have operations throughout the world. And the rest will be smaller than that. So there are a couple of $1 billion brands, but a lot of them in millions of dollars, anywhere between 1-2 million to 200 million, 300 million as well.
Got it. So our proposition would majorly be based on price. That would be our only advantage, right?
No, why do you say so?
Because the market is so segmented, I would have thought that our customer would majorly be looking at the cost competitiveness of their products, because no major player has that much control over the market. So the pricing would be the advantage that our customer would have would majorly be on price.
No, not really. So it depends on the product category. There are some products which are commodity products. There, yes, price 1 cent here and there and changes the market as well. But then there are products which are highly complicated and highly technical. One, not every supplier can manufacture those kind of products. 2, there's a design element. 3, there's a capacity element. So it depends on those grounds as well. And then there are customers who are looking for offering. So how much can you offer? Can you offer one product category or multiple product categories? It depends on that. Now they are also talking about a lot of other things like sustainability, like, what can you do towards sustainability, environmental management. That's also something that they want out of their supplier. They want to see if you have a good supply chain coming out of your country, and locally what's the ecosystem available there. They check our ecosystem of suppliers as well. So there are a lot of factors which impact what they're looking for a supplier. Some can only be relationship, because a lot of these companies are family-owned businesses, and they're looking to deal directly with owners and not with MNC, where they have to deal with some employee.
Got it, sir. And sir, if you could just help us understand what kind of products are considered a higher margin products. So if I have to understand in garmenting or in shoes or in gloves, so what kind of products are considered as higher margin, and what will be the applications of these products?
So the more the technicality of the product increases, the more the customization of the product increases, the more higher margins you can command. Right? In a garment, there can be a normal garment, which is a cotton or a polycotton garment, and very basic coverall design. Yeah, a lot of people are doing that. But when it gets into more multi-norm, you want anti-static, you want chemical resistant, you want rainwear, you want flame retardant, you want high visibility, then the complications of the garment starts, because it needs to be certified to what parameters they want. Also, if they want something designed, if they want the fabric to have elastan for stretch, some uncommon pattern or pattern specific to them or their geography, so that changes the margin. So more customizations, more technical parameters, more difficult to source and get the fabric out and the color and the design, the more margins you can charge. And same thing goes for shoes as well. Industry can be same. It can be in the same industry. Even for a hospitality industry or restaurant, it depends where it is. It depends if the kind of customer that we have, if they want to sell it to a high-end restaurant like a Michelin star, it can change what they're looking for. If they're selling to a roadside store, it can change. So applications remain the same, but the kind of market and the kind of their end customer changes, based on which we see if the margins can be commanded or not.
Got it. And so what
Aditya, I'm sorry to interrupt you. We have other participants in the queue. If you have a follow-up question, I would kindly request you to rejoin the queue, please.
Sure.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Divyansh Gupta from Latent Advisors. Please go ahead.
Hi, sir. I have a couple of questions. If you can just throw a light on the USA and the Middle East expansion that we are planning, where are we with respect to commercializing those markets?
Right. So yeah, we've done a lot of groundwork in these markets, and now it's starting to show results. So we've participated in multiple exhibitions in the Middle East, in Saudi, and also we'll be going to in January in Dubai. And we have now a couple of dealers in that geography. So yeah, that geography is coming out to be good. Saudi, Qatar, even UAE is definitely there. And so the Middle East and the North Africa market is we're getting more inquiries out of this market, and it's we are trying to establish our brand there. So already there's been a significant growth in that market, and we hope to continue this trend. Thankfully, with the FTA, it just makes it easier and more receptive for Indian brands there.
If you can throw some light on the numbers as well, because I don't see the breakup of at least Middle East especially called out in the presentation. So some numbers would definitely help.
I'm not sure if we can share the numbers right now.
As of now, Rohit, it would be in the range of 5%.
Right, probably. Of the domestic, of the overall, I'm not sure.
No, export.
Of the export, okay. So that'll be, so we have a number now. And other than that, so for the US market, again, it's becoming interesting for us. We have now started selling more product categories in the US. Earlier, we were restricted to some categories, but now we have newer customers for the US market, and it's showing good results. We have touched base with many customers now in the US, and we are very positive of this market growing at a good rate year on year.
Got it. Also, if you the Indian supplier who stopped supplying the fabric, was there a particular reason which was driving this decision of his, or was it just like that they stopped supplying?
It was to my best understanding, it was their management's decision to roll back the operations and maybe shut down. So no other reason that we know of why they shut this operation. We used to be a very large customer to them. But yeah, it was their call to shut operations or gradually roll it back. That's what I know best.
Got it. And building on the previous question that one of the previous participant asked, right? The high margin business. So how much would it be contributing to our sales? An approximate number that these high customizations or high tech, highly technical products or high customized
So I tell you, sir, we sell almost safety shoes is in the range of 42%, garment is 26%, and synthetic gloves is at 11%. So almost 80% we would categorize into better margin products. And as Rohit mentioned, the commoditized products like the leather gloves, it is in the range of 19-20%. So there we will have lower margins.
Got it. And just last question, if you can just throw light on the plant utilizations that we have.
So overall, it would be in the range of around 60 to 70% as of now.
Got it. So it has, like Ahmedabad, you are saying is 60 to 70%, right?
Yeah, it would be Ahmedabad project even lower. It is below 50%. So we are just trying to improve productivity there. So these are all, as Rohit mentioned, highly technical, garments, and the productivity is improving there over the period.
Got it. Thank you. That's all from my side. Thank you, and all the best.
Thank you. The next question is from the line of Aditya from Securities Investment Management Company. Please go ahead.
Yeah, so hi, thanks for the follow-up. So continuing with our previous discussion, so if you could just elaborate a little, what role do certifications, play in our kind of industries? So is that a particular company which is certified by European or an American authorities, only they can supply our kind of products, or there is no such kind of requirement in our industry?
So certification is basically in European market is a rule to play in the market. So you can't sell any uncertified product into the European market because there are checks even at their ports, at their customs. There are checks with the customers and their customers as well. So you're not supposed to sell any uncertified product, and this has to be certified by a third party under your name or the importer's name. So you have to ensure that the products comply to some standards, European standards.
Got it. And how long do these certifications require?
So usually 1 to 3 years. How long does it take to get it certified? Okay, so depends. Anywhere between 4 weeks to 8 to 12 weeks, depending on the product category.
Okay. And sir, you mentioned that we also have a dealer and distribution network. So for the domestic markets and Southeast Asian markets, so these dealers and distributors are exclusive to us, or they are supplying products of other players?
They are multi-brand outlets.
Okay, the multi-brand outlets. Okay. And sir, if I look at your financial year 23 sales, the breakup between our shoes and gloves and our body wear, it is almost equal, 30%. But if you have to understand how is it in domestic and export markets, would it be similar?
No, it won't be similar. In the domestic market, it'll be shoes would be a leading component of the market, and whereas in the export market, it'll be workwear and gloves, which will be taking majority of the sales. Almost will be like 80-20, and here also 80-20.
So, any particular reason why that would be the case?
No particular reason as such. In Indian market, we've been established as a good shoe brand, and that's helped us grow in the Indian market. Also in the market, shoes are a category which is well accepted. Other than that, gloves is a very late comer to the market, and as for synthetic gloves, there's a lot of cheap and uncertified imports in the market. So India still does not have a standard for glove, whereas it has for shoes and helmets and these categories. So that's the reason why, and we only deal in something which is certified. So that's why our focus has been in the shoe category, and now we're pushing more of the gloves and the helmets. Helmets has been a new addition for us in the industry. So that's why it's been shoe has dominated the domestic market. And in the international market, it's not like we don't want to sell shoes. We have been able to establish our workwear business because of some good partnerships, and also leather gloves is Calcutta itself is a big exporter to the world, so it's natural that we exported a lot of leather gloves from here, and now we're pushing for more of synthetic gloves and shoes in the export market as well.
Got it. And so just last one question. I believe last year we had introduced a rain-based kind of product. So last year the traction wasn't that much because we had recently launched the product. So just wanted to know how was the traction for this product in the current year?
Yeah, it was good, but interestingly, it was the same fabric supplier which is rolling down the operation. So now we have gotten 2 steps back with that because we need to again start developing it with somebody else. So even with a decent traction, we could not get the ball rolling, and we have to start the project once again, sadly.
Got it, sir. Thank you, sir, for answering my question.
Thanks.
Thank you. The next question is from the line of Bhavesh Sanghvi from Growth Affinity Wealth Private Limited. Please go ahead.
Yeah, thank you so much. So congratulations, first of all, for a decent set of numbers. My question is, if you break down the results, there's a small uptick in the domestic market as compared to the export market. So is that a trend that you are seeing in India, given the impetus of manufacturing in India and China Plus and so on and so forth? So is the governance improving within these sectors and the companies that you guys service for your products?
Yes, definitely, Bhavesh. So the domestic market is something that we are eyeing very closely, and we would, in fact, ideally want it to become a 50-50 revenue split, because one, we operate as a brand here, so it's good for both the top line and the bottom line. And secondly, yes, like you mentioned, the governance is improving. There are MNCs coming into India for manufacturing, so they're bringing their international standards to the Indian market. Even our standard, our BIS, they are getting more teeth in the game, and implementation is getting stricter. Then you have PSUs now procuring through GEM and having to procure certified products. So, and in general, the labor force is increasing in the country, and also added to that, the purchasing power of people is increasing. So sometimes they're themselves making the decisions of buying such products and taking care of their safety. So all of this combined is helping in the domestic growth.
Great, thank you so much. That was the only question I had.
Thanks.
Thank you. The next question is from the line of Pratik Tedia who's an individual investor. Please go ahead.
Hi. Am I audible?
Yes.
A little. If you could speak a little louder, Pratik.
Yeah. Is this better?
No, not really. Your voice is sounding very faint and distant.
Okay, just give me a minute.
Sure.
Okay. Is this better?
Now it is much better. Go ahead.
Yeah, thanks. Okay, so my question is from the supply chain disruption that you mentioned. I understand that they decided to shut shop and things. How are we planning to counter it so such events do not happen in future? Are we looking at multiple suppliers, or are we looking at to counter it with some other?
Yeah, in an ideal scenario, we would like to have multiple suppliers, and that's what we are trying to do right now. But you also have to understand these products or these fabric are not common fabrics in Indian market, and so we have to carefully pick and choose who are the suppliers who can A, supply it, B, give it as per the particular standards, and C, have that kind of capacity which can cater to our demand. So these are mostly in the technical textile domain. So we need more of such raw material suppliers from India to be able to diversify our supply chain that much. But definitely we started that process, and we are hoping to have multiple suppliers who we think can sustain it long term.
All right. Okay. And relating to that, in terms of impact on sales, I think you mentioned around 50% of that specific product category has been impacted. Post Jan, when the supply chain is back, do you think the start would be slow, or would it start at the same run rate as historical?
So yeah, we have orders in hand that we can execute, and we have to club them together now so that we can optimize on our production and get as much revenue possible for the remaining of the year. So we are in close touch with that, and we are hoping that it can start at the same rate. But again, because like I said, everything has to be tested and certified, so we can't. And even after we place the order, the mills will take time to prepare it because it isn't a regular product for them. So we are hoping that we can get that much of raw materials that keeps us full. But again, we are also constrained by what capacities we have because we can't go beyond that. So we are hoping once everything is sorted, we will be running at full capacity.
Okay. All right. Thanks. And do you feel any margin erosion due to this since the orders have been delayed? Do you feel any discounting would be required once you start fulfilling it? And if you can quantify.
Not yet. We don't anticipate that yet. We have well informed our customers in advance, so they are aware of the situation. There might be some revenue loss, but I don't think there should be any margin erosion.
All right. Okay. And just one housekeeping related, and I'm not sure if I would have missed, but do you feel that the exchanges need to be informed about this impact? Or was it improved?
Sorry, the exchange, as in SEBI you're talking about?
No.
Yeah. So in terms of regulatory impact, because that's a business.
That is not that material, so I don't think that is required to be intimated. It is being taken care of. Yeah.
Okay. And one request, I think in future, if there is some kind of disruption, and information to investors would be helpful.
Okay. Noted.
Thank you.
Thank you. The next question is from the line of Disha Seth from Anvil. Please go ahead.
Yeah, so just a follow-up question. When you saw...
Disha, are you there?
You're not audible.
Hello?
Yeah, Disha, you're audible right now. Go ahead.
Sorry. Just a follow-up question, sir. You said that even in this year we'll grow. We try to grow by 15%, but first half has been just 2% growth. So do we have an order book at hand that we are so confident that even this year we'll continue the CAGR?
Yeah, the order position is still okay, and we are hoping for it. Depends on how quickly this disruption is resolved, and we are also banking on our domestic growth, to increase a little bit in the second half of the year. And usually, if you see the history, second half is better than the first half. So we are hoping for it. We've not lost hope, and we would like to be a little, optimistic and see.
So at least we could expect, if not 15%, double-digit growth for the whole year.
Yeah.
Okay. Thank you, sir. Thank you.
Thanks.
Thank you. The next question is from the line of Divyansh Gupta from Latent Advisors. Please go ahead.
Hi. A couple of more questions. If you can just throw some light on the working capital days between, let's say, the domestic business and the export business, and the other view of own brand versus white label. So how does the working capital days differ between these two dimensions?
So basically for, domestic business, we did not have, that the inventory holding would be less, but in case of, export business, which is more of private label, and you need to have inventory as per their requirement only. So there you will have, almost maybe we are holding up to 50 days of inventory for export business, and again you will have more of data there because you are selling to the far destination, and maybe sometimes we are selling to the South America or North America, and there the customer would like to have some credit at least to get, they want to have the delivery, and on getting delivery they would like to make the payment. Then the usage period for credit becomes longer for them. So much you sell to those destinations, the higher the credit would be. But in case of domestic market, the business model is different. It is like, all sales happening against cash only. Hardly we are giving any credit. And yes, inventory is also on the lower side for them.
So just some numbers would help. I understand the thought process, and which is also logical, but some numbers might be helpful.
Number for what?
So debtor days would be how much?
So debtor would be in case of local sales. It's as I mentioned, it is mostly cash, so up to 7 days maximum because some of them are getting paid. And in case of export, it would be on average 30 days. Okay, we are giving
30 days. And receive
35 days, yeah.
30 to 35. Got it. And around 50 days of inventory.
Yeah, in that range. That is mostly for majorly for export. Yeah.
Got it. And in domestic market, we earn more margins compared to the export business, right?
Not necessarily. It depends again. The brand is always there, but you see, basically, as Rohit mentioned, we are selling more of shoes. So the high, these products will have better margin, like shoes or garmenting or maybe synthetic gloves.
So the main reason for asking that was that if exports is relatively lower margin and higher working capital, then does it act more as a drag to our profitability? And therefore, we are also anyways looking to expand the domestic market?
No, not necessarily. We started as export, and export still has, the big market and big scope for growth. So we'd like to grow both area. Definitely, again, in case of export, if we are doing private labeling for The customer, if you can give them good quality and timely product, then they are also willing to share, better margin with you. So definitely we are looking for growth in both the areas.
Got it. And last question on the number of distributors. While you have given the aggregate number of distributors, if you can, let's say, divide it by geography, that how many in Asia and how many in US, Middle East, or at least India versus outside locations?
So about 80 plus 83 or some odd dealers we have overall, and out of that 70 to 72 would be in India only, and the rest in Southeast Asia, Middle East combined.
So then it seems like it's almost like one distributor or dealer per country.
Kind of, yes, at this moment. 1 to 2 maximum, yeah.
Got it. And any plans of increasing this more in international market, or we are more comfortable with one dealer in a location?
No, we are regularly looking to expand it in India and outside both. So we are regularly increasing the number of dealers, but it's important that we associate with the right company or firm or individual. So we have a selection process, but yeah, we are continuously increasing the number of dealers that we have.
Got it. And what would be the Indian revenue percentage? I'm just trying to find
it is around 42%.
42%. And so on an average, one dealer, so we are a 400 crore company, so 42% will be 160. 160 divided by about 70. So about 2 crores is the revenue per dealer.
Not at par. It may increase. It may be higher. It may be lower also. So yeah.
But averaging is mathematical average is correct.
Yeah, that may be
And what would be the spectrum of the biggest and the smallest dealer? One who does.
20% would be giving us 80% of the revenue.
Got it. Understood. That's it. Thank you.
Thank you. The next question is from the line of Aditya from Securities Investment Management Company. Please go ahead.
Yeah, just one question. So what I wanted to understand is our sales in domestic market. So our sales is majorly through dealer and distributor network, and the dealer would be keeping many brands. So just wanted to understand what helps us drive our sales in the domestic markets. So are we paying higher commission, or do we have a very strong brand that the customer is only asking for Mallcom's products? So just wanted to understand what drives our sales in the domestic markets.
So a couple of things. So one is definitely the brand and the brand recall we have in the market. Two is the supply chain, how quickly we get the products to them. So it's important that they have the products with least lead time. Three, we do a lot of technical sales with the end users as well. So we have our own sales force which visits the end user and does technical selling with them. We educate or speak with the safety officers and HRs and purchase officers. And then definitely the relationship with the dealer, how we have. It is not necessarily a commission advantage that we play on. It's a combination of all the things, all the branding activities, marketing activities, exhibitions. Like we said, we participate in a lot of exhibitions, end user exhibitions. That gives us leads, and our policy of always keeping the dealers involved in all the transactions. So we don't do any sort of direct billing. We always keep our dealers in the loop, so that keeps them stuck to the brand.
Got it, sir. Thank you.
Thank you. We take that as the last question. I now hand the conference over to the management for the closing comments.
Thank you all for participating in the earnings call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to the Investor Relations Manager at Valorem Advisors. Thank you, stay safe and stay healthy.
Thank you. On behalf of Mallcom India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.